Remember this letter, CP2000. This is the infamous letter that gets sent out to millions of people after tax season. Let me tell you about it so you don't freak out. The IRS sends out CP2000 to like millions of people because there was some underreporting on the tax return. So what this means is that you filed your tax return, but you forgot to include something. You forgot to include a 1099, a W-2, interest, dividend, stock, all this, like any source of income that you forgot to report, the IRS will send you the CP2000 with that correction. Basically add that to the tax return that you filed and tell you have to pay more money. Now, you don't need to accept the changes that the IRS made. You can appeal it, and you can also even amend your tax return to do it differently than the way they did it. And this is where people make a mistake. They sometimes accept the results the IRS gave without consulting with a professional, without even appealing it to see if that's actually correct. Especially when it comes to 1099s from self-employment. So you forgot to include a 1099 in your income and the IRS now sends you a CP2000. What you should do is, instead of accepting the CP2000, amend the tax return to show expenses for that 1099 if you have any, and lower the tax that the IRS is actually claiming you owe. But I personally think the CP2000 is a little too complicated for just a regular person to deal with, so you should definitely get help from a tax professional to see if they can save you money.